Yeah, hi. Good evening, everybody. Can we start?
Yes.
Oh,
Hello, Vaishali. Hi.
yeah, hi. Yeah, so maybe all of you welcome to the webinar on this setting up a tech capability center in India. So I'll start with my brief introduction and then maybe Raghu will take over. Um, so I'm Vaishali Vora. I'm a qualified company secretary with over 18 years experience. I currently serve as Director Compliance and Strategy at SimplyBiz. I've been part of the founding team at SimplyBiz. I lead the corporate secretarial compliance vertical, which is a flagship vertical of SimplyBiz. I'm responsible for ensuring quality execution, delivery, client retention, driving operational excellence, and I closely work with the team. I also involve in business development, client acquisition, ongoing client engagements, and forging strategic partnerships. Um, a brief about SimplyBiz is that basically we are a multidisciplinary professional services firm offering solutions in the areas of business setup, bookkeeping, accounting, tax and payroll, transaction advisory and support. So we do not want to spend too much time on this and we want to quickly move to the subject. I am joined by my colleague, Mr. Raghu, who's the founder and director of SimplyBiz with over 20 years, 28 years of experience in managing and scaling professional services firms. So, Raghu brings in deep domain knowledge and strategic insights. I now hand over to Raghu to introduce himself, share the context of today's webinar, and then go ahead with the session. Thank you so much.
Yeah, very good evening, friends. And also good morning. Some of you may be joining from the other geographies. My name is Raghubabu Gunturu. I'm the founder at SimplyBiz. And I have close to 28 years of experience in setting up business, M&A, IPOs, listing, and help a lot of foreign companies to set up their business in India. Seeing them, how they can be successful. What are the ingredients for, for setting up a successful tech capability center in India, right? So, I mean, the whole idea was maybe we will spend around 45 minutes, 40 to 45 minutes. I will share, spend some time, and then Vaishali will share some of our thoughts on this subject, and we will have a Q&A, and then we kind of wrap up, right? I'm sure, this topic, must be resonating with a lot of people, setting up tech capability center in India is not a new phenomena, right? I mean, we've been doing this. India is, getting this kind of work, this kind of companies maybe for last 30 years, 30, 40 years, but more so for last 10 years. And then the currently for maybe last 6 to 12 months, we are all witnessing this buzz called GCCs, Global Capability Centers. Maybe the Tech Capability Center. Now it is a refined name, more sophisticated name as Global Capability Centers. And what do we mean by Global Capability Center, which we used to call as the kind of a cost plus models, back office. Now that has been transitioned to a Global Capability Center, Global Value Center, right? I mean, the kind of work the Indian offices, Indian teams are doing last 3 decades, particularly last 10 years, has improved significantly. It used to be a testing, it used to be a call center. From there, we moved on to, I mean, everything, anything your parent is doing is getting done in the Indian offices. I mean, that is a broad context. And, the whole idea of this webinar, while you have a large GCCs, Fortune 500 companies, multi-billion dollar companies who are coming to India, having maybe 500 people, 1,000 people, 2,000 people, but there are also a lot of, companies from US, Europe, and the other markets. They're also coming in large number. They may be looking at, maybe 20 people, 50 people, 100 people, 200 people. Everybody needs a talent, but the talent is available only in India. So that is where, we thought, we should do session like this. We also call this as a, nano GCC or a micro GCC. Yeah. So increasingly, a lot of companies are coming from overseas to build their capability center in India. The whole idea was, why do we need, and how does it work, what it takes, what are the building blocks, what is the talent landscape, and if one were to take a decision and move forward, I think this session will help you to understand, this is the roadmap, right? This is the roadmap we need to build to see that capability center is built in India and becomes operational and then becomes successful. That is a very, very high level context. We have maybe around 20 slides. I'll just pull up my slides and then we'll go over them. Yeah. Is my screen visible? What I'm sharing?
Yes, yes.
Okay, perfect, perfect. Thank you. Yeah.
But you may have to put it on slide share mode.
Is it better now?
Yeah.
Okay. Yeah. Right. Now, why India? I don't think in the current context requires any elaboration, right? I mean, we are our 4 trillion economy, and particularly the IT industry revenue, right? Is around 283 billion. Out of this, 75-80% is coming from the exports. I mean, largely these are all IT services firms, companies like Infosys, Cognizant, Accenture, Microsoft, right? All of them have set up their services businesses, which have grown manifold. Lot of revenue is coming from the IT services. Currently, the contribution is exports. Within exports is an IT services, right? Now, if you look at the FDI, we kind of garnered around $81 billion FDI. Majority is coming in the services sector. The FDI is coming into services sector. I mean, unlike a lot of other advanced countries, India's GDP growth is happening in the services sector. Manufacturing sector growth is little limited compared to the services. And within the services, the software services is having the larger share. Now, as I was mentioning, the GCCs, right? Around 1,700 GCCs are operational in India. And I mean, the first GCC which came in Bangalore, by this MNC called Texas Instruments, right? Nobody called that as a GCC those days. But now, as I said, right, we are redefining this industry landscape, and that's how this is called the GCC. I mean, when we say 1,700 GCC, I mean, this takes somebody who's having at least, more than a couple of thousand people operating in India from GCC. They call it as a GCC, but there are mid-market GCCs who may have few hundred people. There could be small and micro GCCs. We may have 50, 100, 50 to 100 people or a 200 people kind of a thing. And the number of startups, maybe 10 years back, we have 2,000 startups, but today we are talking about 1.6 lakh startups, right? This is the landscape. And, if you look at a little bit of the global context, Indian context, right? With the Trump coming back to the power, in the second term, we are seeing a completely different era, even if I have to explain the current context, I call it as a 3T kind of a context: Trump, tariffs, and the technology, right? The kind of AI evolution which is happening. These three things are changing landscape big time, right? And Trump and tariff also brings the immigration piece, right? There are several immigration new directions from the US, right? The country like India, which has been sending several students to the universities and several professionals, right? Skilled professionals, particularly in the technology sector, has been fueling the growth in the US. Now, there are some restrictions there in light of the the immigration restrictions, and everybody is trying to look inwards. While we went for a liberalization, globalization, all of that, we had a free economy, free trade between the countries. But last few years, everybody started looking inward and self-reliance, right? What all I am consuming, how do I produce myself so that my economy grows, right? That's what Trump is doing. Make in India is also in the similar direction. Several countries started looking at this direction, but definitely this has to be a balanced approach. There are cost parameters, supply parameters, raw materials, several things are there, right? Just simply saying I want to produce within India, within US, everything, it is not possible. You may not have a raw material. You may have a cost of labor which is very high, which is prohibitive. your consumer is not going to consume, right? So that is the kind of a context we are in. Yeah. So this, if we go deeper into IT sector in India, when we say tech capability center, what we are saying, not necessarily the global technology companies or a technology companies alone coming to India, right? There is a manufacturing. Now, say we all know the technology is indispensable and very, very strategic function for every business. You may be a manufacturer, you may be a retailer, you may be a aircraft, you may be a telecom company, either old economy, new economy. For everybody, technology is very, very important. That is a differentiator. It is no more a back-end technology. It drives, it influences survival, it influences growth. That is the, importance of technology today, right? So when we say tech capability center, what we are also saying that even the non-technology companies trying to have tech capability center in India. That is the context. So yeah, if you look at IT sector in India, 7.5% of the GDP is coming from the IT sector, which is very, very significant. We spoke about 1700 GCCs. I mean, the digitally skilled workforce, is around 5.4 million, right? And the talent pool, software engineering and AI and ML, 3.7 million. See, today attraction to global companies, small, big, medium, is the talent. English speaking, large engineering population with this skill set, technology skill set in terms of AI, ML, artificial intelligence, machine learning, cloud computing, cyber security, right? All of this is available in India. That is driving them to come to India. I mean, the recent report said 120,000 AI professionals embedded across GCCs in India, right? Now, this is the power. This is what, bringing a lot of traction. I mean, we will see some of the use cases, some of our own experience, who and how several people are, using this opportunity, using this talent. Yeah. I mean, this is a little bit deeper into the talent is concerned. I mean, employability in India, around 55 people are overall employability. Overall, pool is concerned. Overall employees are concerned. 55% is employable, and I mean this number needs to increase. While sometimes we have jobs, but the skill set is not available. Our employability is not available. That is one challenge we are facing, which needs to be addressed. But in particular, the IT sector, it is 75%. And I mean, the youth under 25, we are talking about a 600 million, which we are talking about a 60 crore is under the age of 25. 40% of global skilled workforce will be from India very, very soon, right? If you look at the engineering graduates, exhibit high employability with electronics and communication, 72%, electrical 68%, mechanical 60%, biotech 65%. But these are the numbers, humongous. The number of engineering graduates we produce in India is humongous. See, for talent, not only that, the engineering college, but the entire ecosystem, like last 10, 15 years, the whole ecosystem got developed, right? When we look at the startups, now these engineering graduates are getting exposure, working in the startups, and also building their skills. You have the accelerators, you have incubators, you have several things happening in the engineering college that is making them better equipped, better skilled, better employable. While the salaries have gone up, the tech team for the last few years, but even today the tech talent, what one has to pay in India versus maybe US or Europe, maybe it will be maybe 30-40% of what they would incur otherwise. While the main attraction is talent pool availability and the quality of talent, and the third is the a little bit of a continued arbitrage in the cost, which is another driver. I think we have spoken. I mean, we will address some of these, right? And on the talent side, we have addressed why and all that. But the people who are, who are new to India, coming first time to India, don't know the culture, don't know the demography here, the several things, in the new geography, right? For them, there may be several questions, right? How do I start? Where do I start? How do I acquire my talent? How do I retain? How much do I pay? Where do I start? I mean, several questions, there are obvious questions, first time you are coming to India. We are making an attempt to see, how much of this we can address today in webinar. I think my colleague Vaishali will, deal in little more detail in terms of regulatory, landscape and all of that. But before, taking up this, we look at some of the engagement models, right? How the various kind of ways in which, 1 second. Okay. Yeah, this slide is not showing, fully, but I mean, I have a slide for each of them separately. Let's look at, I'm sitting in maybe Silicon Valley, maybe Europe, and, I'm building up my startup, right? See, I have raised some money, maybe $5 million, $10 million, right? So I want to build a product, right? So the way to go forward, what do I do, right? I mean, if I take that as a position, a founder from Europe, building a startup, building a tech product, right? Now, he who wanted to hire T from India, right? Now, there are, multiple ways this can be done. The one easier, quicker model is employer on record, right? And I don't want to, get into entity kind of a thing, but I need 5 people, I need 10 people, maybe next 2 weeks, 4 weeks, I want to have them and start working. That is where this employer on record model comes. There are several service providers like us, who bring the talent to work for the, these companies on a very, very quick turnaround time. So you don't have, you very simple for a company which is, trying to hire people, very, very simple, identify a good service provider, engage with them, give them specs, they hire, they are on their roles, you pay for them. And, there can be very short-term project, 3 months, 6 months, there could be long-term project, all those kind of things are possible. It is very swift, quick way to get people working for you. Even for some reason you wanted to, keep it for very short term, this works. The cost is very, very, very low. The cost is very low. And if you don't like, you can switch to another service provider. Somebody trying to do first time, I think this is the best approach. Let me hire some people, give them a project and see how is this working, what is not working, what do I need to tweak to see that it succeeds. So this can be maybe 6 to 12 months of, model, and spend enough time and then take to the next level. Then the the next model is build, operate, and transfer model. Generally, this is being followed by the mid-market companies and large companies, right? And they have capital, they have management bandwidth, they have several service providers, and this is a more of a strategic decision. In the UR model, it is a bit of a operational decision, and which is fine. It works, it'll work, but if not, it's okay, right? I'm not committing too much of capital, too much of management bandwidth, right? So, but when it comes to build, operate, and transfer model, I'm taking a very, very strategic decision, very important decision, right? If I need to have, currently I have 200 people, we want to get to say 300 people, maybe 500 people, right? So next to couple of years. Therefore, it is not, I just have some center, hire some people. No, it won't work. It has to be seen, it is an extension to the parent company, right? You are part of the parent company, right? There is nothing called offshore, it's a branch, it is giving less important. It won't work. It won't work, right? Marriott is setting up a GCC in Hyderabad, right? Now, it's a very, very important strategic decision like that. So it is a very, very important strategic decision. Given you are coming to the new geography, new market, you may not know all the nitty-gritties. How do you set up and operate, right? That is where this build, operate, transfer model came into existence. Again, this has been very established, model. Not that we are inventing now, but it does exist in the market for last couple of decades. I mean, in places like Hyderabad, there are few companies who started like this. Few entrepreneurs did this for a large company. Then this model evolved, right? That is where build, operate, transfer model. I mean, even here somebody can set up their own legal entity, or there is no legal entity required. But what am I trying to do? I am doing a hybrid model, right? I am trying to bring somebody else's skin also in the game. I, as a company coming to India, but can I get a service provider as a partner? He also has a lot of interest in building this so that it becomes successful. He makes money, I make money, right? So that is the build, operate, transfer model. So these are generally for a long-term contracts. Look for 3 to 5 years kind of a contract, and there is a goal for this relationship. We are looking to build this center, to start with 50 people, then go to say maybe 500 people say next 3 years. These capabilities. Now at parent company, this is what growth we are looking at, right? Currently we are here. As we grow, right, and we have these additional positions coming up because of the growth, maybe because of not availability of talent. So there is a very structured plan, and the sponsor in this case, sponsor, at the company level, generally it is the CEO and then CTO kind of a decision. This happens. How does that get operated? As I said, a service provider brings all of this: your real estate, your talent hiring, culture, talent retention, and project management skills. All of that, gets bundled in the BOT model, right? Obviously, hiring bringing a right partner is very important for success of this. I mean, uh, as I said, right? So it could be for 3 to 5 years. Thereafter, this can be transitioned to a parent company. They will fully own. They will fully own. BOT. I mean, the from a third party ownership, it goes to the parent company. That's how the entire ownership moves, and there are kind of a margins which are decided here. You have a markup as well as the a variable incentive. Right now, this is happening to deliver value, right? It is not for a I just need to hire some people, I'll go and hire, right? No, there is a business impact, there is a growth impact, there is an outcome impact, all of that. Where does that come? It has to deliver, right? So you have a right strategy, right partner, right plan in place, right execution in place. So if we are able to meet this deadline, so as a partner who are building this for us, so you will also not only get this fixed fee, but you may also get an incentive, right? So that is how this model works, which is very established, and most of the large companies who don't have a prior experience working with India, they go through this build, operate, transfer model. Yeah, so this is an extension to the build, operate, transfer model. Again, as I gave you, right, there are several examples here, right? Qualcomm to Ford to Kellogg to Samsung, some of our own clients like Fuji, Agai, Ground Game Health, Vera Insight. I mean, they're all the examples of building their own capability center from day one. I mean, some of them would have transitioned from BOT to owning them, but a lot of people also do on their own. Some of the smaller companies, for them, the cost could be prohibitive. If I go through a service providers, maybe there is a lot of markup and they may not afford. That is one reason. Second, they are big enough. They are big enough. So they are able to put enough capital, enough management bandwidth, internal as well as external. That is how they are able to build this own legal entity model. I mean, which has its own advantage. So people who think it is a strategic decision, long-term decision for the long-term value, this is the way to go. I'm not looking at hiring 5-10 people. I don't know whether I'll continue or not. This is a long-term, right? If I give you an example of Marriott hotels, right? They are trying to build around 3 to 5,000 people. not a day, one day, first year, but they want to start with 500, go to that. That is the kind of requirement they have. Therefore, some of them will go. FedEx, which is coming to Hyderabad, I mean, it's already, I think it's in the public domain. They are coming. So in these kind of situations, right? I mean, I will talk some of our case studies maybe in the later. It's your extension, right? I mean, your extension and the senior management sits here, and your extension of your parent company. The branding is obvious. You are working more closely, with your parent company. You're part of the same organization. It's not like the third party or a service provider. You may have some inhibition. Culture unfit and those kind of things. But here it doesn't happen, right? So this is also very, very successful. And what is also happening, the recent trend in the first wave of outsourcing, right? The companies like Cognizant, Infosys, and Wipro got a lot of work from several large, conglomerates, all over the world, BFSI, manufacturing, all of that. Now they saw they have very good experience, but of late they started realizing now, why should I mean, everybody has a pressure on their, margins, right? As I grow, but the margins needs to improve, and there are investor expectations. How do I meet those kind of expectations? But if I have a outsourcing partner, obviously he's making his own margin. But now the realization, for multiple reasons: one, I wanted to see that what I am building is under my control. Second, I may also be able to save some part of the cost, right? Therefore, I wanted to outsource, from outsource to insource, right? I mean, you can see the several headlines around this. Now, everybody, while they have outsourced earlier, but now they are making that as their own GCC. Now, given this, some of the large services companies, they are going to lose a lot of business, a lot of opportunity there. They started building another vertical, for GCC enabler or a GCC service provider. Same clients, instead of losing, they are trying to help them so that they make, they continue to make some amount of money. Yeah. So this is what on the third model. I mean, broadly, three models. One is the UOR, very loose, and I mean, I think yesterday I was discussing in my team. I said, if I have to put it in a very, very loose and little bit of a funny way, the UOR is a dating, right? And the second is the BOT. It is a live-in relationship. The third is a marriage. I mean, that's how I put it. I think that will also explain what we are saying here. Yeah, Vaishali, you want to take over from here?
Yeah, sure. Yeah.
Okay. So you will share your screen, right?
Yeah.
Okay, sure.
So is it visible? Is my screen visible?
Yeah, yes, Vaishali. Yes, yes.
So basically, what Raghu has dwelt on, where there are three models in terms, I mean, they are basically, if you see broadly, there are two models. One is without setting a legal entity, the other is with setting up a legal entity. While if the foreign company decides to have, in terms of its long-term plans, it wants to have a legal presence in India through its own entity setup. What we have seen with most of our clients who are foreign companies, maybe from any country you name, they are mostly preferring to have a private limited company set up as a wholly owned subsidiary in India. And the wholly owned subsidiary is where the majority of shareholding is held by the parent, except maybe 1% is held by an individual as a nominee of the parent entity. So, in terms of the regulatory requirements, the Companies Act 2013 is the mother regulation, which basically lays down the entire framework with regard to the management and governance of companies. And there are certain mandatory requirements, not only at the stage of incorporation, what has to be, I mean, set rules and regulations and processes to be followed, but even post incorporation also, there are rules and regulations with regard to internal management, management and all of those things. So I'll just start with the basic requirements for a private limited company. I mean, the reason why the overseas companies opt for private limited company setup is basically it is identified as a separate legal entity in terms of having a limited liability concept. There is free transferability of shares. I mean, there are so many other advantages in terms of from the regulatory standpoint. The minimum requirements for a private limited company are basically minimum of 2 shareholders, a minimum of 2 directors, out of which one should be mandatorily a resident in India. Resident in India is basically under the income tax rules, it is defined, and based on that, the residency period. So it is not important that the person has to be an Indian national. It has to be only he has to be a resident in India. Resident in India. It could be a foreigner also staying in India for the period as specified in the Income Tax Act will be considered as a resident in India. So that's the minimum requirement. There has to be a registered office in India, and then there is a cap. Currently, the Companies Act does not mandate any minimum capital requirements. So you can start the entity with as minimum as you want. So this is a little on the incorporation process. I mean, also the minimum requirements. The incorporation process is a little cumbersome in the sense you need to go in for a name, you have to go through filing a number of documents, charter documents, you have to go through especially in case of a foreign company coming to India, if it wants to incorporate, then there is also a requirement of all the documents in terms of the ID and address proof of the subscribers, directors, and all of them getting apostilled in the home country. That's something which is considerably a time-consuming process, because of which the setup takes a considerably longer time. In which case, the option could be that, as service providers, we initially set up a company for you and then transition it to you at a later date. So this is on the requirements and the process of incorporation. But post incorporation, as I said, there are requirements in terms of the ongoing compliance, which calls for that the board composition should be as per the Companies Act. There has to be the shareholders' interest have to be protected. Apart from that, there has to be periodical, mandatory 4 board meetings in a year. The board meetings, of course, can happen through the video conference mode. The regulator has become a lot more the technology adoption has been very high with the Indian regulators, because of which meetings can happen through the video conferencing mode, both board meetings and general meetings. Apart from that, there are mandatory requirements in terms of appointment of statutory auditors, the books of account being laid before the members, being approved by the members. Before which a statutory audit of the books of accounts has to happen. Then event-based compliances, which have to be taken based on the nature of events. If there's an infusion of capital by the parent entity, then in that case, there has to be, subsequent to the incorporation, there has to be a compliance undertaken for the infusion of capital. There has to be a reporting requirement which has to happen. So, all of these are the ongoing processes which have to be followed in accordance with the Companies Act. So this is broadly on the, regulations that the Companies Act provides for. But there is also another important regulation, which is the Foreign Exchange Management Act and the flow of funds. So what happens is when a parent company, an overseas parent is incorporating a subsidiary in India, then in that case, there is flow of foreign direct investment from overseas to India through the normal banking channels. And it is governed, all the rules and regulations governing the foreign direct investment are governed by the Foreign Exchange Management Act. And RBI is a controlling authority for all of this. But of course, the most of the powers are now vested with the authorized dealers in terms of, the routine reporting requirements and all of this. So the foreign direct investment is definitely, government has taken a very liberal view, and now the foreign direct investment is allowed under 2 broad modes. One is the automatic route and other is the government route. The automatic route is there where there is no government approval required. So sectors like information technology, maybe tourism, textiles, or single brand retail trading. These are some of the sectors where direct inflow of foreign direct investment can happen from the parent entity to the subsidiary, and there is no prior permission needed from the government. Post post the infusion of funds or the foreign direct investment in India, there is a reporting requirement to the regulator. Uh, there is another route which is called the government route, of course, where there are sectors like defense, telecom, broadcasting. All of these sectors are regulated, and definitely a government approval is needed in such cases. Uh, I'm not talking about the prohibited sectors because in this session it may not be relevant. Real estate, plantation, agriculture, all of these are prohibited sectors where FDI cannot come in. In terms of the reporting requirements, basically, once the foreign direct investment comes in within the issuance of capital happens within 30 days, a reporting has to be done to the regulator, which is the RBI, through the authorized dealers, and it calls for a detailed submission of documents and all of those things. So basically, I'm trying to say that the processes have become very, very simple, and as a result of which the inflow of funds from overseas to India has become a little seamless process especially in those cases where it is under the automatic route. Then coming to foreign companies who are also, where there is a holding and subsidiary relationship, and there is a transactions that are happening between the parent and subsidiary. Those transactions are basically governed by the transfer pricing rules, and the main intention of the transfer pricing rules is to ensure that the transactions between the parent and the subsidiary are conducted at arm's length. That means at a fair market value. This is basically in order to prevent any profit shifting or tax evasion that can happen. The arm's length principle basically is concerned with that the transactions must be done between the parent and subsidiary in a way as if it was be done between two unrelated parties. So that's the concept. The transfer pricing regulations also call for mandatory documentation, reporting, and all of those. We'll probably not get into the depth of those things. Yeah, and then as I mentioned that once the incorporation happens, post incorporation also there are certain basic licenses, registrations which are mandatory before which the company can commence its operations. Uh, in terms of trade license, GST is the tax which is if you start from incorporation, there is PAN, TAN, which is the basic tax registration numbers which have to be obtained. Apart from that, GST registration is mandatory in case there is a supply of goods and services in India. IT sector is generally taxed at the rate of 18%. So the GST tax is mandatory beyond a threshold limit. Importer export code number is mandatory because in cases where there is when you are exporting services to your parent company, obviously you will have to have an importer exporter code number. There are various other registrations in terms of the local registration, state level registrations, which would be shop and establishment registration, trade license, the social security registrations like the EPF, ESI. I mean, some of these registrations are very, very mandatory in order to see that before commencing of operations. And Indian tax laws are definitely very, very stringent, and any non-compliance is being taken very seriously by the regulator, the Ministry of Corporate Affairs, the Reserve Bank of India, and the for listed entities, the SEBI is one of the regulatory authorities. So basically the regulators have become extremely cautious, extremely watchful in seeing what is happening. Because of the technology adaptation, they are able to also identify cases where there are lapses, there are non-compliances, and all of these are definitely being taken very seriously. So from a regulatory standpoint, I would say that any foreign company wanting to set up its business in India must definitely go with a regulator who can actually give them a full proper hand holding, proper support from the beginning, and see that the company is properly incorporated, it is in good standing all through the life of the company, and the process is properly, compliance is followed with full I mean very, very consciously, very, very dedicatedly. Yeah, so I'm just covering this part of it, and subsequent to this, I will request Raghu to take over.
Vaishali, are you done?
Yes, I'm done, and I'll just stop sharing my screen, and then you can take over, please. Raghu, I think a couple of slides, just an overview on the tax and the repatriation, and then this use case, if it's possible.
Which one?
Yeah,
This
tax
one?
and repatriation, just touch upon it and we can go ahead. Yeah.
Oh, tax and repatriation.
Yeah.
Oh, from here. Okay. Yeah. Then I mean, particularly the tech capability centers are the comes under broadly IT sector. 100% foreign direct investment is allowed. So whenever the profits are available, those can be repatriated in the form of dividend to the parent company. And if the company is sold or if there is an M&A, even the capital investment can be repatriated. I mean, that's a very, very easy process. A lot of liberalization which has happened in that area. Yeah. Yeah. So, I mean, even the corporate tax got rationalized and, the corporate tax was something like 35 plus or so, but currently it is 22%. And for the companies with a large turnover, that is 30%. Again, um, particularly the tax administration, we call it as income tax. A lot of automation is done, online systems are put in place. It has become very easy to comply. We have a faceless assessment, those kind of things. If the refund has to come, which will come very, very quickly. The only obviously the other thing is, with India has treaty with several countries like Australia, countries like Mauritius, Singapore, US. There are a double tax avoidance agreements. The whole idea was that a particular income should not get taxed in two geographies. Then obviously it becomes very uncompetitive or very expensive, right? Nobody wanted to do business and get taxed in two geographies, and you don't make any money as investors or owners. So that is where these treaties have come into place. And I mean, this is very, very useful and very, very important for the companies and investors. It only gets taxed at the source, and because of the treaty, you take the treaty advantage, and you get credit. Let's assume US company put some company subsidiary in India, and India pays a certain tax, maybe on royalty or maybe the management fee and all that. So whatever tax paid in India, that gets credit to the parent company in the US. If the cost is more, the tax is more, in India it gets taxed 20%. Let's assume in the US it is 25%. Only on the incremental, that 5% needs to be paid in the US, 20% is already paid in India. That is again very, very very good tool. I mean, which is very important for the investors. That is briefly on the taxation. Even, I mean, we also have the indirect tax, that is the goods and services tax. Again, we also have the input credit, right? It's only you pay tax on the value addition you are doing. There is no double taxation, and particularly companies are exporting goods and services, there is no GST, right? If some companies pay on their input the GST, goods and services tax, they also get the refund. That's the the mechanism we have in the goods and services tax. Yeah. So I wanted to share, bit of, some of our, the kind of work we have done recently. I think this may help, uh, you know, um, some of the prospects, or some of the companies who are planning to come, right? I mean, the ground game health, right? So what do they do? I mean, it's a startup based out of US and raised money. And I mean, the US, the benefit transfer, healthcare benefit transfer healthcare management is a very, very big thing. They have a social security and the state provides the healthcare benefit. So that has to be managed. They also have, bit of underprivileged people, where this kind of benefit transfer happens, and that has to be managed properly. So for that purpose, we help them set up their India Capability Center. And matter of, I think, 3 years, they have grown from maybe 10, 20 people to maybe 100 plus people, right? 100, 120 people. Entire product is built out of India, Hyderabad, and CTO operates out of, Hyderabad, right? So they have integrated so well from very beginning, and it's become very, very successful. It was one of the very successful startup, all that. You see the kind of a company that is a startup, raised funds, that kind of a thing. Fuji is into IT services company. They have multiple Caribbean islands, US and India. They have an operations. They have a large clients in the US and Caribbean islands. That work gets done here. We help them in multiple ways. We help them entire their finance operations and regulatory, all of that. We have done a lot of good work for them. We have more than 2 years of engagement. Very, very successful company, scaling very, very rapidly, right? And then you look at this Zelaris. It is an HR, large HR, services firm, based in the Europe, right? And they have operations in multiple countries, maybe I'm assuming maybe 30, 40 countries, right? These several HR functions have been now offshore or maybe put up in the center in Chennai. So we have been working with them for, more than 3, 4 years. I think it's long, very long association. Yeah. Yeah. Aga Technologies, this is the US-based agri-tech startup, and they're building a very, very interesting, or rather, they built a very, very interesting solution to the large agri farms, right? You have large greenhouses which produce flowers and the vegetables. What they have done, using AI and IoT and machine learning technology, they came out with a complete solution for the 1 second, let me switch on my video. I think my video is not there, right? Let me just switch on. 1 second.
Yeah, your video is not there, yes.
Once, let me. Yeah. Is my screen visible now?
Yes.
Okay. Thank you. Yeah. So that's what I was telling. They built their entire platform / technology for a large greenhouses, which monitors the entire seeding the plant, to inputs, to water, to nutrients, to humidity, to the outcome and output, right? So it's controlled environment. Entire environment is controlled through a technology with a dashboard and all. We've been associated with them maybe, I think, more than 5, 6 years. And they are based out of Bangalore, have maybe around 30, 40 people. This product came out very well. They have few installations in the US. Now they're expanding to the UAE market. They also wanted to launch, in India very soon. Very, very successful. Some of the early stage, maybe growth stage companies looking at, funded companies, very small, maybe 5 million, 10 million. Right now, it becomes very, very important, right? Entire their startup is building on the technology, that product, making it successful. For the, these centers, the tech capability centers, to be successful, it has to be very, very hands-on approach. It cannot be remote approach, it won't work. It has to be very, very hands-on, integrated with the parent. A lot of thought has to be given, and then definitely it becomes successful, right? These are some of the examples. So Vera Insight is, another very, very small tech capability center in Hyderabad, which we have set up. This is a company based out of Texas in the US. They're in a very, very interesting business. What do? They design and manufacture and supply the shelves to the large retailers, to the Walmarts, those kind of guys, right? So, why are they coming? What are they doing in India? I mean, as I said, right, whether you are a manufacturing or a technology company, technology is very important. How do I bring my new designs, right? I want to build AI team, AI engine, so that I can bring new designs, right? That is what their motivation was. Uh, I mean, they had, a couple of Indians who are part of their team, and I mean, they have a kind of a monthly break, brainstorming session. They were talking about a talent, how do they grow, those kind of things. It came out that, why don't we look at India as an option? That is how they have taken this piece and evaluated why should we do, when do we do, how do we do, all that kind of thing. And then they approached us, and I think it's more than a year. We've been able to set them up, set it up, and then become operational. I mean, today they have very, very small number, but they have a lot of plans to make it very, very important center for their global operations, right? So they're starting with the technology side, design side, AI engineers and all. Then they also wanted to look at the other functions, maybe sales, marketing, some of those functions, right? So again, I mean, this must be what, maybe $150 million company based out of US. And I mean, what's happening, particularly for last maybe 4 or 5 years, is uh, even the smaller companies post-COVID, I think maybe we should say post-COVID, it has become very, we all become very, got integration much more better. COVID forced us to work closely, remotely, and, even the tools, technology, and, broadband, became available. And even the smaller companies have, started coming, and they are able to manage. Otherwise, it used to be very prohibitive. I don't know, why do we get into new country, have new problems, that is the past. Right now, people don't think, that's where we came in. And these are some of the examples we have done. And we continue to help companies like this, help them set up their capability centers in India. I don't know, these are some of the, yeah. I mean, there are of late some of the funds are mandating, right? So funds are mandating that you need to have a tech capability center in India. You need to leverage tech talent pool available in India for your building your own product, right? So that is another reason, right? Some people, it may be cost arbitrage or maybe de-risking, right? Now I'm a very large corporation. I have my entire talent in one location, right? Therefore, it may be a risk. Therefore, I want to risk mitigate. I think, a couple of months back, we were working for a very large company. We were part of their RFP process. It's a large retailer, fashion brand, right? And operating in multiple countries, in Africa, in US, in Europe, in London, right? They have been operating, but they wanted to set up a capability center in India. Why? There are two, three reasons. I mean, the reason they operate, the employment related laws are very, very rigid. I mean, which is becoming, which is becoming very difficult for the businesses to operate. Very, very rigid, and kind of a little bit of a draconian. That is one reason. Second, the talent pool is not available, right? I mean, that is the second reason. They wanted to build something in the cyber security, right? I mean, for every business today, cyber security is very, very important, right? So they don't have talent pool. So they wanted to build that capability, building that capability center in India, cyber security capability. The other reason was they already have several service providers within India or outside India. They also did several acquisitions as part of their business growth over last 10-20 years. There's some business which they acquired in Australia. The technology they are using is different, right? And the service provider who's providing those services are different. If they acquired a company in the London, they have a different technology. They are different service provider. They already have some service providers in India helping them in the technology side, cyber security. They want to consolidate, right? They want to bring everything under their control. That is how they thought they should build their own capability center. I mean, we worked extensively, but I mean, we could not win this project in the last minute. But this speaks, what kind of work, why they are coming into India. Anybody has any questions? Maybe we can take, if anybody has questions. Otherwise, maybe we can spend, a couple of minutes on what we are doing and then maybe wrap it up. Anybody has any questions? They want to raise your hand or you want to speak? You're welcome. Okay, so what do we do? I think this slides talks about the helping set up capability center in India, and we also call as a micro or a nano GCC. And it is not just hiring people. It's not just hiring people or doing some trivial work. For these businesses, for these companies, it is a strategic decision, right? This has to be planned and has to be executed very well. So there are multiple building blocks. One important building block is talent. How do I get the right talent? How do I build a right culture? And how to retain them? And see that we are able to, deliver the value, right? For which this, capability center is set up. So that is where we help, enabling the right talent. I mean, we have some in-house talent. We work with our partners in getting the right talent quicker and faster. And then we have Bid Shield, which is a entire regulatory finance operations and regulatory stuff we bring onto the table. And infra support. Obviously, you need great workspace for employees to continue to get motivated. So we have some infra partners who bring in this kind of a excellent workspace. Yeah. We also have the another partner who bring the culture coherence, right? I mean, it all boils down to what kind of culture organization has, right? I mean, we can't see, feel, and touch, but that's very, very important, right? Unless we have the right culture, our nation may not grow, right? I mean, there is a motivation required, there's a ownership required, I mean, all of that, this is very important, unless we put this in place and people have ownership and the companies are able to that kind demonstrate that kind of a bonding with the employees, and also combine that culture with the parent company, right? What kind of a culture the parent company is having? How do I ensure that my extended arm in India also has a similar culture, right? So that's very important. We kind of bundled all of these to see, all of this we can bring onto the table and build capability center. Yeah. So I think we are good, I think, unless anybody has any questions.
Raghu, I have one question. So like there is, okay, for example, if I have to start a startup, I want to start one startup where a few of my friends working in Canada and
Okay.
I work from India. And my model is instead of taking my own talent, right? What I'll do, I'll engage the people from Upwork or some freelancers, right?
Right.
Okay, so I develop the product from India center, and the company gets registered in Canada or US, right?
Right.
So how does this model works and how the regulator is, compliance?
Yeah. So, I mean, your entity is registered in Canada, but you have resources. Maybe some resources are working from India, some resources are working from outside India. They're all, I
Yes,
mean, they're all not a full-time employees. They're all
exactly.
contractual, right? I
Yes,
mean, they're all contractual. You pay them, the consultancy fee kind of a
it's a
thing. There is no employment.
freelancing model.
It's a freelancing,
Yes,
right? So,
yes.
I mean, models like this, there is no challenge as such. Your Canadian entity will pay to the employee working from in India or the employee working from other place, right? So therefore, I mean, there are no challenges as such for you to build something like this. There are companies who are building like this. Yeah.
Yeah, I want to register a company even in India also. Like the
Okay. Right.
subsidiary want to
Right. Right.
register in India, but the model is like this. Okay, so there are
Yeah.
people working from Canada or US and people
Yeah.
working in India. So it's like IDC.
Correct, correct, correct. I mean, this is the very, very common structures now, Srinivas. I mean,
Mm.
US, Canada, the parent is registered there, and there is a subsidiary here. It's for to support the tech capability. And as you said, there are also freelancers we are hiring. I mean, all this is perfectly fine. These are the models which are working, and we have also helped several
Yeah.
companies in this kind of a model.
But how does the regulatory and the compliances?
Compliances can be
This
taken
model,
care.
I'm not, yeah, I'm not taking the people, just I'm paying per hour basis. And
Yes, yes, yeah.
as you said, I may not be paying through the Canadian dollars. I may be paying some rupees, right?
Right. Yeah, yeah. And it is possible, in one model, you can pay from Canadian entity, or you want to pay from a Indian entity, that is also completely possible. And
Mm.
I mean, there are some, obligations like withholding tax, the contract, those kind
Exactly,
of.
tax regulatories.
Yeah, yeah. But between
Mm.
the US, I mean, the Canada and your Indian entity, right? I mean, the wholly owned subsidiary, there has to be a contract in place. And
Mm.
based on the kind of work this Indian entity is doing, there is a transfer pricing. There's a
Mhm.
concept called transfer pricing. While it is a subsidiary for the purpose of the government, income tax department, or any country, they treat these two entities are independent entities. If these entities are independent, how will you relate? How do you do the transactions with them? You will offer some margin, right? 8%, 10%, 12%. If you are doing a high-end work in this Indian subsidiary, maybe you may have to have a margin, maybe around 15 to 18%. On that, you have to pay income tax in India. But if
Mm.
it's it's not that high-end work, coding or maybe a little bit of a, programming and all that, then, the margin could be between 8 to 12%. And that this Indian entity needs to pay tax.
Okay, and what is the difference between subsidiary and GCC or TCC? Tech
No, no, see, that is a legal entity, but I mean, they're all used in interchangeably, right? It is all used
Mm.
interchangeably. Yeah,
Mhm. Okay.
yeah.
Okay. That's thank you.
So, shall we conclude?
Yeah, I think we are good. Yes.
Okay, thank you so much. Thank you all for joining. Okay,
Yeah.
bye-bye.
Thank you. Thank
Thank
you,
you.
everybody.
Thank you. Bye.